So my name is Chip Dodd. I'm a member or board member and member of EO Southeastern Virginia chapter. I'm super excited to be doing this webinar with Barry Dorans from Wolcott Rivers Gates. As everybody knows, that's been reading in the newspaper, the PPP, or the Paycheck Protection Program loan that's being offered by our federal Small Business Administration has been a lifesaver for many companies, small businesses all around the United States. It is complicated though, so many of our webinars have been about how to get into the PPP program. This webinar now is specifically, great, now you've got the money, how do we properly use it within the SBA guidelines? There is no such thing as free money. There are strings attached. The goal here is not to show people how to game the system. It's exactly the opposite. We're trying to show entrepreneurs how to properly use this money, keep people employed, keep your company going, and optimize your position for potential forgiveness if you follow the guidelines. So Barry and I have worked together. He's helped me on numerous things, everything from employment law on like compensating your employees or handbooks and things like that. But he's also a wizard of entrepreneurship and strategy, especially optimism. So I'm very happy, Barry, that you were willing to give us this webinar and share your guidance on this PPP program.
Hey, Chip, thanks very much for putting this all together and for your host. I'm going to ask you to do the same thing you did the last time, which is as questions come in, if you could relate them to whatever the slide is as we come up, you'll let me know what it is. That won't be reading and try to go forward. So I want to thank everybody. I know everyone is very busy, so I'm going to rock and roll right into the slide presentation. Kel, would you go ahead and shoot that up? And we're going to play the slides. So obviously, that's what we're here to talk about, the Payroll Protection Program loan. You've got your money, now what are we going to do? Chip had asked that I go ahead and say what I've done to give me some sort of gravitas and say I'm not the dullest knife in the drawer. Instead, I just said, here are some of the people that said I'm not the dullest person, the dullest knife in the drawer. Let's go ahead. So my principal advice to you is going to be, come up with a business plan for your business. Don't try to make your entire business focus around this one lump of money you're going to get. You may want to tweak your business plan based on the money, but don't focus your entire business on it. Secondly, I want to tell you that everything is changing so quickly. Guidance is still being issued. There's going to be more guidance issued next week or two. So don't really trust anything today. Today it's really going to be more of a summary and overview. Don't get hung up on a specific detail. You're going to have to consult with an advisor when it's time for whatever it is you're planning to do. So let's go to the next slide. So this, to me, is what I think this whole plan is about. On the one hand, I have a brownie. And the brownie is I have a loan with 1% with a 2-year amortization, 6 months of no payment, no personal guarantee, no collateral. That is a very good brownie. Now, I might get the brownie with ice cream, which is some partial forgiveness. But even if I don't get the ice cream, it's still a very good deal with that brownie. I love brownies. So I want us to all focus on, we got the money, let's use it to build our business up. Yes, forgiveness is something we got to keep track of, but let's not alter everything we do just to get to forgiveness. One of the things I don't want to make light of the situation. I mean, it's a devastating injury. A lot of people are being very seriously injured, some dying. But I do think we have to look at it with a little bit of light. And the little light I get here is, and this is going to come up later, words have different meanings in the English language. And remote, for example, has 3 different meanings. One of the attorneys in my office was dealing with his staff person and said, by email, what are you doing? And she responded that she was working remotely. And he responded, well, remote means either far removed in space, out of the way or secluded, or to a small degree. Are you working to a small degree remotely? And so that's one of the things, again, I'm trying to make light of it, but each of the words that they're going to use in these plans have different meanings, and it's going to make life very difficult for you. Let's go to the next slide. Here's the one that just gets me so mad. There are 2 different programs we're going to talk about, which is the PPP, which is going to give you the money. And then they're going to say, here's what you can use it for. And then they're going to deal with forgiveness. When they talk about covered period in allowable use, it's February 15th, 2020 till June 30th, 2020. When they talk about forgiveness, it's 8 weeks. It uses the same phrase, covered period, but it has 2 entirely different definitions depending where you are. So that's something we have to be very careful about. The second thing is, a lot of people have been asking about this FTE. What does it mean? I don't know. No one knows. There are a variety of different federal laws that use FTE, but we don't know what type of definition they're going to use. Third, I would point out to you payroll costs. The statute is very clear. It said that the that it excludes withholdings and employer FICA. But the SBA put out a FAQ that said, I know that's what it says, but that's not what they mean. It means exclude employer side. So all this is designed to say, be very, very cautious that on its face, it looks like it says one thing, but there may be an explanation that says that's not what it means. So allowable use, this is the first half of the thing. If I get the loan, there's things I'm allowed to spend it on. And again, the covered period for this, as I pointed out, February 15th through June 30th, 2020. Forgiveness is going to be a totally different period. During this period, I can cover any salary, wages, commissions, or tips. I can cover vacation, parental family leave, sick leave, except for things that are covered by a tax credit, which you later will get under the FFCRA. I can also cover my health care benefits, my retirement benefits, and any state or local taxes. For us in Virginia, mostly that would be the state unemployment tax. It excludes compensation in excess of $100,000 as prorated for the covered period, but it does include, and again, on the SBA credits, it does include the employee withholdings. So all that is an allowable expense. Next, payments of interest on a mortgage obligation, but not principal. Next, rent. And when I first read rent, I assumed it meant rent on my lease, but it says under a lease agreement. So that could be trucks, copier leases, anything you have leased, that could be included, and then utilities. And it also includes interest on any other debt obligation incurred prior to February 15th. And again, it's important to remember that this doesn't mean that these things are forgivable, because a lot of them aren't, but these are things you're allowed to spend it on. So let's go to the next slide. So if I spend the money on an allowable use, I have to repay it, but I get up to 2 years and I get 1% interest. And I think, Chip, when you got your loan, did they give you the amortization already?
I haven't funded yet.
Okay, well, as soon as you get funded, they're generally going to give you your amortization saying, assuming none of it's forgiven, here's what you have to start paying and here's the monthly payment. All that's true if you use it on allowable use. If you use it on something other than allowable use, you can be criminally prosecuted. And they're certainly not going to give you the 2 years. So one of the questions people have asked, which is a great question, but I don't know the answer, should you open a separate bank account to track spending? And that I just don't know. Some people say you should open a separate bank account because that'll give you a better opportunity to understand and keep track of how you spend the money. Others say you can put it in your general account so that way you can move it around a little bit and then be in a better position to say, I actually properly used it as long as there's enough money in that account to fund it. That's something I would go with your bookkeeper and with your accountant and say, what do you think? A lot of people are opening up a separate bank account. Go to the next slide. So this is the part that everybody wants to talk about, the ice cream. Covered period is 8 weeks. And again, I keep pointing out, could they have used a different phrase than covered period? But during the 8 weeks, they're going to forgive certain things. And we're going to look at that next slide.
Wait,
so here's how
can we back up just for a second?
Sure, go ahead.
I believe one of the questions was already on there. From receipt of the money, right? It's from the date it gets funded. Because at first you get approved, then you're going to sign and you're going to close, and then you're going to get funding, right? These are three pieces of time. And so doesn't the 8 weeks start the minute the money hits your account?
The 8 week, great question. The 8 weeks starts the money you hit the account. And where that's going to get very confusing to us, and we'll deal with this another slide, is it says salaries paid and incurred. And what we're very confused about is, well, if I get the money on Thursday and on Friday I fund payroll, does that payroll count? Because some of that cost would have been incurred prior to Friday, depending on how you do your funding, obviously. So that's one of the issues we're really not at all that clear about. But certainly the 8 weeks starts the day you get the money. And basically the math is this: they add up all the stuff you spend, payroll, rent, mortgage, interest, utilities. They're going to multiply it by a percentage, and that percentage is the reduction in headcount or employees. They're going to then subtract any reduction in pay if you have some, and the end amount is that's what you're going to get forgiven.
Okay, so let's unpack just a little bit of that. Oops.
Yep.
Let's get back. So one of the questions specifically to define all utilities, and I assume what they mean is power, internet, water. I mean, trash. I mean, is it really everything?
So here's what I don't understand. It covered utilities, and this is defined as electricity, gas, water. The transportation has me stunned. I don't know what a transportation utility could be. I just have no idea. But it does include telephone and internet. So arguably that would include cell phones. That's a telephone. But those are the covered utilities that are there. So electricity, gas, water, transport, telephone, internet access. The other question we had earlier was, what about the owner and his payroll? Well, payroll cost includes all salary, wages, commissions, and tips, excluding the compensation in excess of 100. So if I made 150 for the covered period prorated over the 8 weeks, they would exclude the amount over the 100, but the rest of it would count as not only an amount that's allowable, but that would be also forgiven as well.
So one question just came through specific to that is, that means gross wages or net?
Gross wages. So again, the statute made it sound like it was net. The SBA guidance was very clear on this and said, no, gross wages. So
Gotcha.
Gross wages will be forgiven. Now, it doesn't forgive the employer side, the FICA side, but it doesn't, any money that's paid to the employee or paid on the employee's behalf on the way of withholding, that is counted in the loan forgiveness amount.
Okay, one other nuancy thing, and I know we don't have guidance, but I guess there's a couple options here. So let's say I get funded today, it's Wednesday, my payroll's Friday. Since the payroll on Friday was accrued prior to funding, if I can afford to, I probably should wait until the next payroll when it accrued properly.
And that I don't know, Chip, and the reason I say that is you're going to have it at the back end, right? At the back end, you're going to have the same problem, which is, well, if I do it that way, then I'll be funding after the 8 weeks for a period that was during the 8 weeks. And I apologize to those of you that we think the guidance is going to come out by the 27th. I was hoping it would come out by now, but as I said to Chip, I wanted to at least start this before the 8 weeks started, and people have already told me they've got money last week. So that's why we want to get out kind of ahead of the curve.
Okay, so one other strategy, I guess, so far there's been a couple questions regarding this, because when you get funded, you're like, okay, what now?
Exactly.
So let's say I get funded today, my payroll's Friday, and I realize the accrual part was prior to, but I really need the money to make payroll. And so I go ahead and use the money to make payroll now, and I clearly document it or whatever. I've got it in a separate account. And then later on, 3 weeks from now, the guidance comes out and says I shouldn't have done that. I basically could bring the money back into that same account and pay the money back into SBA and bygones. Is that a fair strategy in case I did something wrong?
So that is the strategy, and we've talked about with some other people in advance, that that's one legitimate strategy, is say, I will pay it. And that's, again, goes into, do you want a separate account or not? If you have a separate account, then yes, you'd pay it back into that account, and then in the next month, you then take that money back out for the next payroll. And,
okay.
and that's how that would work.
Great.
While we're still on this same slide, and again, it doesn't say this for allowable use, but it does say for forgiveness, the obligation must be enforced prior to February 15th, 2020. Another issue that's going to come up is, well, what about those of you who are entrepreneurs who own your own facility and pay rent to yourself but don't have a written lease? The text of the statute says rent under a lease agreement in force prior to February 15th. To me, that would mean if I've been paying my rent to myself every month the past year, that should be something that should be forgiven. On the other hand, I can't start paying it now if I haven't paid it before.
Does it matter if you own two different legal entities, such as an LLC that holds the property? Is there any difference in that scenario where one company is renting from a legit other company, as opposed to another situation where all of my assets are owned in one company? Does any of that make any difference?
Yeah, so to me, I think it would. So to me, if the one company owned the real estate, it would pay a mortgage that would fall under the covered mortgage. If the two separate entities, the operating entity would pay the entity that owned the real estate, that would be rent. The entity that owned the real estate would pay the mortgage, but that would not be a covered expense by the operating entity.
Gotcha.
It should wash out more or less. But again, the critical thing for me is it doesn't say under a written lease agreement. It just says under an agreement or an obligation in force prior to February 15th, 2020. And again, I put the same thing here about rent. What is that? If you rent a copier, is that included? If you rent some other things, is that included? And then, of course, the thing, I think everybody's heard this already, B, C, and D, these three other issues, cannot exceed 25% of the total forgiven amount. We'll go to the next slide. And so this is the point I was trying to make. What it says is incurred and paid during that period. And that's the two examples of the ones we've just talked about. How is they going to work that out? I think they're going to have to do one or the other. They can't limit it to less than 8 weeks. And if you say incurred and paid, that would be less than 8 weeks because nobody ever pays the day that they do it. Next slide. So this is the next question that comes up. You determine the maximum amount, which we just did. That's all those things I spend in 8 weeks. And then I say I'm going to have a headcount reduction. And I know this is one of the questions we had, Chip, earlier beforehand. Some people had sent in some email questions. If I am a non-seasonal employer, I get to look at one of two periods. And it's the first period is the FTE during the 8 weeks that I have the money, divided by the FTE during this period, February 15th through June 30th of 2019, meaning looking at last year, or that same 8 weeks divided by this year, January 1 through February 29. And people have asked, well, look, I reduced size or hired size outside of these timeframes. What happens? The answer is you're stuck. It's either A or B. That's all you get. Unless they tell you you're seasonal, in which case they only let you use A. And again, no guidance has come out as to what's seasonal or how that's going to be decided. Here's where things get really confusing. Rehire. If between February 15th, 2020, and I'm sorry to read this to you, but it's very technical, and April 27th, there's a reduction. So that would mean not last year, but sometime this year, after the pandemic struck, you reduced headcount. So for most people, probably before the payroll advance program came into effect, there's a reduction as compared to February 15th. So again, they're not looking at the other periods, they're just looking at February 15th. So did you let people go after February 15th then? And then by June 30th, the reduction, and that's where I'm confused, which reduction? Are we talking about the reduction of the percentages above? Or are we talking about the reduction after February 15th? Has been eliminated, then there's no reduction in the forgiveness due to the loss of employees. I think what it's saying is if I let people go after February 15th and I rehire them by June 30th, there's not going to be a deduction in terms of percentage for loss of headcount.
So one other way to look at it is, as long as you get back up to that number of FTEs that were in effect on February 15th. So you rehired everybody you laid off. It doesn't have to be the exact person either. It's you got Correct. The same number of FTE headcount, then that would maximize your application and to potentially get the 100% forgiveness.
So it would maximize your percentage. It wouldn't maximize the forgiveness. Because remember, we're going to determine the forgiveness based on payroll costs during the 8. And I'm going to give an example later on. But an easy example would be if I closed down my entire, say at a restaurant, I closed down my restaurant, and during the 8 weeks I didn't hire anybody back. Well, my payroll costs would be 0. Well, remember 25% more than that could be other stuff. So none of my rent's going to be covered. And the fact that whatever you do is not going to help you any that you hired everybody back, because they're only looking at the maximum forgiveness amount as what happens during the 8 weeks. And in terms, I just saw a flash up on what about the FTEs. No one has given us clarification on how they do FTEs. In other federal programs, it's not uncommon to say something like, if you have people that work part-time, you add up their hours and divide by 40. But that's not always how they do it. In other cases, they say if they're people that work less than, say, 35 hours, we add up their hours and divide by 40. If anybody's working 35 and more, they count as 1. So again, we're still working at guidance. And at the end, I'm going to put a link, Kelly's, my assistant's email address. When we get the guidance, if you want us, we'll just shoot you that guidance whenever it comes out, which I'm sure is going to have to address this. So we're going to hit the next slide. So this is the other part. And again, I started by saying I don't know the answers to any of this stuff. Everybody has heard about, I think, if there's a reduction in wages of 25% or more. But when you actually look at the way it's written, it doesn't read that way at all. Because what it says is, if what you pay them during those 8 weeks is more than 25% during what you paid them during the quarter. And as many people pointed out, well, 8 weeks versus 12 weeks, that's only 66%. So if I paid everybody exactly what I paid them before, there would be a reduction in pay. So again, very confusing to me. Now, of course, there's a cure in here. And so I think what will happen for this, at least, is the cure is going to come into play. So during the 8 weeks, say I pay them their normal wage, that's still only be 60%, 66% of what they were making before. But I get to add back in whatever amounts I paid them through June 30th, 2020. And so that should get me back up to at least 75%, in which case there wouldn't be another reduction. So we can go to the next slide.
I guess I'm trying to look at the intent of that regulation. And to me, it seems like what they basically wanted us to do is make our employees whole, right? At the end of the day, this money is so that there was no reduction in either workforce or pay for workforce. So could it be that basically one part of this is get me back up to my head count before the pandemic, right? So if I had 100 FTEs, they want me to get back to 100. But they don't want me to be able to get back to 100 and have cut them 30 or 40% in the total payroll, meaning, you know, the employee's no longer whole because I've cut them back. Could that be the way that this is being interpreted?
That's how we all understood it. But when you read the way it was written, and again, they wrote it over a weekend, they changed it, but it says during the quarter. So right. Again, to me, it's going to work out most likely because as long as you don't let them go at the end of the 8 weeks, you'll continue to pay them and their pay should eventually equal what they made the prior quarter. So that's the cure period. So it's through June 30th, if they made the same amount, and I guess they mean during the prior quarter, well, they should have made that amount, then you'll be okay. So the next slide is really very confusing, but I did feel I had to put it in there to kind of explain what's going on. I'm going to walk you through this. So let's assume, and I use small numbers because it's easier for me to look at. Let's assume in my prior period, I had 10 FTE. And then by April, I reduced down to 5. So I cut in half. And I've assumed in my second column over that my payroll per FTE, that's per head, over the 8 weeks was $6,000. So over the 8 weeks was this, et cetera. And then for the 10 employees turned out to be $61,000. So the first 2 lines are just, here's where I am before I got my money. And then during my 8 weeks, my option number 1, I don't rehire anybody. If I work my way all the way across, at the end, I'm $20,000 to the good. That is, I continue to pay these people what I would have paid them anyway, because I'd already cut back to 5. I got a maximum forgiveness of $41,000. I had, I reduced half my payroll. So of course they cut it in half, 20,600. I didn't spend any extra money than I would have spent. I'm actually coming out ahead than what I would have done otherwise. Option number 2, what if I go back and I say, I'm gonna just hire a couple people back? And in that case, the money goes up, and money goes up for this reason. Remember, there's that 25% on the total forgiveness. Well, of course, the more staff I have, to the extent my rent and utilities were a higher number, that number would go up as well. And so that's really what that chart's trying to show you. The final option 3 is, well, what if I rehire everybody for that 8 weeks? And then I ran that math out that 8 weeks, and what ends up happening is you can see that number is even higher because, again, the more payroll I have during the 8 weeks, the higher the maximum forgiveness. Since I hadn't laid anybody off, I'm going to get back 100%. That's 41,000. Now, what I did, though, is very deceiving because I haven't factored into, well, what's going to happen at that end of that 8 weeks? Am I going to let them go again? Am I going to, continue on? If I go through here, everything's fine, but that 9th week, 10th week, 11th week, 12th week, if my business hasn't built back up and I still have people on my payroll, that's going to eat right back into that money. And that's where I guess, Chip, they're saying, hey, if you do this, you'll come out ahead, but you keep these people on and you'll break even. Because obviously the federal government's not intending on you to come out ahead. I put in the 4th option, which is to me really trying to game the system to see what it would do. And as you can see, it actually is not as beneficial as hiring all 10 people back in 8 weeks. Here I have no rehires during the 8 weeks. But on the last week, on June 30th, I rehired all 5 people back and paid them just for a week because it doesn't say how long I have to keep them. And so on that, what happened is I had an extra payroll expense of this $38.45. So the net to me was $37,000. So I know there's a lot of math in here, but I'm trying to show you that all these numbers will work out differently depending upon what your payroll is like, what your rent and utilities are like, how many people you're bringing back, what your percentages are. And I haven't considered in this, by the way, any reduction in forgiveness due to decrease in salary, because that would change all these numbers. And I haven't considered the employer's FICA share, because that obviously is an expense as well.
So one other thing, and this was on one of the other EO webinars, but I'm interested in your experience, is in past programs like this, such as TARP, in the last crisis, there was an audit of some companies on how they use the money. And my understanding is people who would potentially think about doing option 4 to maximize this could potentially have a liability out there if they got audited. Is that fair?
No, actually, I think if they got audited, that actually would come out okay. But I think they have a bunch of other issues, which is let's say I hire back these 5 people for that 1 week. I let them all go the next week. And then 3 weeks later, things start getting better and I go to hire people. Those people that are all let go are telling them, don't go to Dorans. He just fired everybody. He hired us up to game the system. So I think that's the bigger problem you run is your credibility with your employees, at least in my opinion. But they are going to audit. That is true. There's no doubt they've already set up a plan to audit. They will be auditing. How many, I don't know. But they're going to be looking to see, did you take this money and go buy a boat? Because if you did, there's going to be a problem. Did you take this money and not hire these people back? That's going to be a problem. And you have to do a reporting on it. So let's go to the next slide. So this is just the points we're just going through is, do you try to hire more employees to maximize your deduction for rent? To me, you have to be your own moral guide. You want to run your business as your business. When we look back at this a year, 2 or 3 years from now, $50, $100, $200,000 is not going to make or break anybody, I don't think. So be who you are. Don't try to game a system. I do question 2 other things. A, will you be able to find employees to rehire? Because now all these employers have let everybody go, and now this money is hitting in the next week or 2. Everybody's going to be trying to go out and rehire people because they now have the money. Well, some of those people have moved. Are they getting unemployment and refuse to come back? The same thing's true on June 29th, 2020. If everybody's going out there to try to game the system, what's going to happen? Finally, I want to point out, what if people are on paid sick leave or expanded FMLA? They count towards the head count, but they don't count towards payroll. So when we looked at the money that's forgiven, the maximum amount, if I had 10 people, I let 5 of them go, I bring back all 5 that I let go, so I still have 10 people, but 2 or 3 of them go out on expanded FMLA, I'm going to be paying them under a different program, which is that expanded FMLA. I will not be getting credit towards forgiveness for those payments. Next slide. These are basically the 3 options I see. There are more, obviously. 1, hey, there's some businesses, and I hate to say it, they're not going to survive. So what should you do? Should you consider spending on the allowable uses, rent, mortgage, etc., to obtain a reduction or release of any personal guarantee, and then close the doors? Remember, there's no personal guarantee on this. It's a company obligation. If you close the doors, the federal government doesn't get the money back. Your bank's going to get paid in full. That may be a legitimate option for some people. B, what if your business is going to survive? Do I maximize my spending on my payroll and forget all that rent and all the other utility stuff because I've now maximized my ability to ramp back up when things get better? The third option, what if my business survives but it could become more lean? Do I spend evenly again throughout June 30th so that I'll have, while my forgiveness may not be maximized, I've conserved enough cash and employee goodwill to get me through the downturns? So we go to the next slide, which is going to be our questions. And that's the link if you want the guidance once it comes in. I've been checking every day. Once it comes in, if you send an email to her and put SBA guidance in the subject line, we'll go ahead and shoot that out to you. Chip, you want to start going through some questions?
Yeah, let's do it. And some of these you might have already covered,
Okay.
but let me see here. Okay. I got a PPP loan for one of my stores. Is still closed. My origination date is April 7th, so my 2 weeks is already gone. How do they calculate the 8 weeks?
8 weeks from the day you get the money. The
Yep.
documents had said origination, but they've changed and said it's no, the day you get the money.
Yep. Okay. So this is another one that I've heard this quite a bit. If we use 55% of the PPP for payroll and not 75, is that forgiveness prorated?
Yeah, it's 2 things are getting confused. So the 55% will be subject to total forgiveness, meaning the money you spent, plus up to 25% of the total for rent and utilities. Now, the percentage that will be given forgiven will be based on your head count and your salary reduction. So again, we start with what's the total amount that can be forgiven, and then we go into, is there going to be a reduction because I have less employees, or is it going to be a reduction because I paid less money?
So I am really, really glad you clarified that, because I think many of us had thought that the 25% is relative to the amount you spent on payroll, and you're saying the 25% is relative to the total loan.
No, it's relative. Yeah, it is. It's relative to the total amount of the forgiveness. So it's more than 25% because it's 20% of the total forgiveness. Right.
Yeah.
I tried to run the math on the numbers. I got myself confused. I think it's 30-something percent, but whatever it is. Yeah, but again, it's all going to be based on what you spend on payroll. If you spend less on payroll, you'll have less that'll be covered on rent and utilities.
Okay. Okay, this one is in regards to highly compensated employees. So when distributing payroll for the 8-week period for employees that earn more than $100,000 annually, we are only able to pay them up to the adjusted salary, or they can receive the full salary using PPP funds.
So my understanding, we'd have to go back to the slide on allowable use. I'll have my secretary go back and find out where we're looking, is they definitely exclude that in the forgiveness. I think that's not excluded in the allowable use, but we're gonna go back and check for allowable uses. We'll go back to allowable uses. No, they exclude that as an allowable use as well. So you can't spend that on compensation in excess of 100,000 prorated for the covered period.
So I guess that's an argument for keeping the PPP money in a separate account and only using it for allowable expenses, because then you could take your general funds operating account and make your $150,000 employee whole again.
Correct. You'd pay the first 100 out of, well, not 100, but the prorated amount out of your PPP loan account, and the additional amount would come out of your general operating.
Yeah, okay, but you just want to clearly document that.
Right.
Since it is specifically said don't do that, you would have to clearly
Right.
document that you did it using your own money. Got it. Okay, good. Yeah, very good question. Are auto leases included for company-owned vehicles?
It says payment on any lease agreement, but it says rent, and you just sit there saying, is rent? I wish I knew.
So that's one where document it well, and then if guidance comes out during the 8-week period, you could always pay it back out of your general operating account and make the SBA loan whole again if you misused it. Right? Is that fair?
Yep.
Okay. So I think one person said the only employer tax would be the VEC, state unemployment insurance tax in Virginia. So I think they were just making a comment.
Correct. That's on the what it would be counted payment of state tax. We don't have any. I don't think anybody here locally. I know certain cities have taxes, but none locally that I know.
Right. Okay. This is a long one. Would it be wise idea to calculate all of these expenses: phone, internet, transportation, salaries, wages, utilities, rent, and keep track of that, then provide those numbers to the lender to approve or not approve? My understanding is the finance organization, bank, credit union, fintech, etc., is the only one making determination on what is forgivable. Yes. So I'm going to apply to the bank. My banker is the one that's going to make the decision if it's forgivable based on the guidelines that eventually will come out by the SBA.
So what's really, and there's several different, and actually I know the answer to this question unlike most of them. So there's several different factors that's just bizarre to me. The bank determines forgiveness. If the bank says it's forgiven, they turn to the federal government. The federal government gives them the money back. So remember, the bank is the one that's been giving you the money, not the federal government. So the bank gave you money. They say, I'm going to forgive it. They turn back to the federal government and say, look, I'm forgiving Chip's money. Give me all that money back. If the bank doesn't say that, say, no, it's not forgivable, they got to make you pay it back over the 2 years at 1%, which they don't want to do. They'd much rather get the money back and loan it out to somebody at 5%. So the banks are in a position to want to forgive. Now, there is required to have some documentation, but the law also says if the bank screws it up and forgives a loan it shouldn't have, it doesn't make any difference. The federal government will give them the money back. So yeah, the banks are going to, I think, be very lenient about this. You will have to have documentation. That is very clear. The regs say you have to have documentation.
So that's another check in the box of maybe consider a different account and track everything in and out, specifically tied to an invoice or a payroll, et cetera. Right. Okay, so let's move on. Our healthcare costs. On healthcare costs, what amount do you include if your employees contribute? Is it total cost invoiced by the vendor or net of employee contributions?
Yeah, I think net of employee contribution. I wouldn't count the employees' money.
Gotcha. An accounting question: do we have to credit the expenses directly, or can we take the money to other income based on those expenses so that our trend analysis isn't out of whack going forward? That's a tough one.
Yeah, I don't know that I understood the question.
We have to credit the expenses directly. Okay. Yeah. Directly to the loan, right? Or can we take the money to other income based on those expenses so that our trend analysis isn't out of whack moving forward? So it's an accounting question.
On his profit and loss, how he's going to account for it. No one's going to care about that. You're going to have to prove that if you said my maximum forgiveness is $100,000, that you had $100,000 of payroll costs plus utilities plus rent plus mortgage.
Yeah, and maybe that's one to punt to your CPA potentially to look at how to account for it. What if a position was totally eliminated? So I guess that goes back to the FTE count and such. It does. If I fired a salesperson but rehired a recruiter, that's still, it just matters on FTA and total wages, right?
Yes, that's 100% correct. FTE and total wages.
Okay. I had a part-time intern working by the hour. We ended the internship when we started working remote. Could that be considered a partial FTE?
Well, it won't, because remember well, depending on which period. For the covered period for loan forgiveness, we're only counting the next 8 weeks. So if that person is no longer doing work for you, they're not going to count as an FTE at all. They may have counted in one of the earlier things in the denominator of what was your total FTE, depending on what timeframes they were employed. Remember, whether you're looking at last year or the first quarter of this year.
And I guess the other thing that maybe the confusion is they don't care about who worked what hours, right? They take the total number of hours, divide it by a number like 40 or 35 or 30, and that's your FTE count. They don't care how many part-timers and full-timers you really have, right?
That's correct. And again, we don't know what that limit's going to be. They may say if somebody works 35 or more, that counts as a 1. Or works 30 or more, that counts as a 1. But if you have 3 other people that collectively work 60, that counts as 2.
Right. As long as the number 40 or whatever number you use to cut the total hours by, it's got to be the same on the front end and the back end. It really doesn't matter what number you cut it by. It can be 30 or 35. The math is the same.
Yep.
Right. So, okay, good question. Okay, let's moving right along. Isn't there a provision in the PPP that says that any salary reduction in excess of 25 will not be forgiven? What if the high wage earner in excess of 100,000 makes 150 and the payer is reduced to 100 for this loan? Oh, does that decrease make it unforgiven?
Yeah, so no, it doesn't. And actually it specifically says that that is not a reduction. But I want to point out again, it's not a 25% reduction. What it says in the act is that I compare what they're made during the quarter and I compare it to what they made during 8 weeks. And if that difference is more than 25%, I'm going to reduce that dollar amount unless you make that good by June 30th. But in doing all those analysis, I'm still going to exclude anything they earned more than $100,000. So I can cut, so if somebody's making 150 and I brought them down to 100, that there's not going to be any reduction based on that.
Right. I guess one other thing, when I filled out my SBA loan, they were very specific when you calculated your payroll, which is inclusive of things like healthcare and all of that. You had to extract out any compensation over 100. So that portion wouldn't have made it into the loan application.
Correct.
Right. So it's not like it's not like in one situation the total comp was there and then the next situation it's everything under 100. You've already cut everybody down to 100 when you went into the loan.
That's correct.
Is that fair? Okay.
Yep.
Okay, if you furlough all the people in the, like speak to text butchered this, so I'm having a hard time. If you furlough all the people in the 9th week, there are no penalties, correct? And is loan still forgiven? So
correct. The way that I read it is that if you furlough everybody in the 9th week, meaning in other words, during that 8 weeks, you brought everybody back and you paid them their full pay, and they somehow didn't get less pay than the 75%, that's that whole math thing we're talking about with quarters versus 8 weeks, then yes, you would get 100%.
Very cool. If I use qualified funds for payroll for the 8 weeks, then let somebody go after that, is there an issue?
And the answer, that'd be the same answer, no, there's no problem.
Okay. Yeah, Tom was apologizing for the typo, okay. So what about the employees that quit? With quotes, or get unemployed? I hear they're not even looking into it if the employee was fired or not. I guess this comes down to unemployment insurance, right?
So the unemployment insurance, the 2 things I would say about that were actually 3. One, I just want to remind everybody that if somebody gets unemployment, in the old days, what would happen is they would file a claim, the VEC would reach out to you and say, did you fire them for misconduct or did they quit? If either of those are true, they wouldn't get paid. If they were fired for misconduct, you wouldn't get charged. So your rates would not increase going forward. They've made it very clear now that basically everybody's going to be accepted because of the numbers. I mean, I don't think they accept every single person, but for the most part, everybody's going to get accepted. They're not going to change your rating based on people you let go. So that rating is not going to change.
But there's also the problem, and I guess my HR department had this discussion today. If somebody, we need them to work because they're essential workers. And
Right.
they'd say, I quit. I'm gonna go get unemployment because I can make more money in unemployment than I would as an essential worker. I'm not even gonna get a phone call to fight it, right?
You should get a letter requesting information, and you should say quit. Now, what they typically will, my guess is what they'll do is they'll have approved the person and they'll have paid the person. They will then have a hearing on yours. And if you said, like, I offer them a job and they refuse to come, they'll then say, we're cutting you off and you, employee, owe me the money back.
Okay, good. So our HR departments should continue to operate as if the old rules still apply.
Yeah, I would say, yep.
Very good. I appreciate that question. That's really good. Okay, is the 10,000 EIDL grant considered to be part of the PPP loan? Very, very good question.
It's a great question. I don't know the answer to it, but my understanding is twofold. One, you can't overlap. So you can't use the SBA loan for the same expenses that you use the PPP loan. That I know. Two, my understanding is if you got the grant from the SBA, the $10,000 grant, that's going to be reduced against your forgiveness of the PPP. But I'm not really an expert on the SBA loan. That's a totally separate program through the SBA. My understanding is that's like 3.25%, 3.75 interest rate or something. But that's just a different program.
So, so I'm going to give you my strategy, and you tell me, is this a good strategy or not? I was going to basically treat the 10,000 similar to the PPP and throw it in the same account and account for it very, very specifically. Okay. Just in case that also gets audited, I want a clear accounting of what I use that money for. Do you think that that's a good strategy?
That's a very good strategy. Again, you can't use them both for the same thing, right? So you can't use the 10,000 for payroll and then use the PPP for payroll. Now you're looking inquisitively like, do you mean payroll during a day or a month? And the answer is I don't know. It just says you can't use it for the same expense. So to me, if you said, well, I used my $10,000 emergency grant to cover the first week before my PPP loan came through, that would be fine.
So let's say an excluded thing, maybe such as software, I could use the 10,000 to pay a bill for software because it wasn't included in it wasn't an allowable PPP expense.
Correct, that's definitely the case. Now, but I think what's going to happen is when they calculate your forgiveness for the PPP, they're going to back out that 10. They're not going to let you keep both.
Gotcha.
I don't know that for sure.
Okay, very good, thank you. Okay, what if you spend the money on past debt, such as credit card debt or back rent? Can this money just be used as a loan and paid back at 1%? So I guess in this situation, they're not even trying to get forgiven. I just need to pay these bills.
And the answer is yes and no. If it was past debt that fits within what we have as allowable use, February 15th through June 30th, then yes, you'll get 2 years. If it wasn't for that, it was some credit card debt that pre-existed all of that, then that's a problem for you. They could either criminally prosecute you or demand the money right away.
Okay, so a potential solution, if I was in that person's situation, I'm going to use the PPP to make my payroll. Let's call it 100,000.
Right.
Which now I did not take that 100,000 out of my general operating account, which I normally would have made payroll. And I can use that 100,000 or 50,000, whatever I had, and I can go pay those back credit cards.
Correct. But what I think we were talking about was, and this is, I think I dealt with this is somebody that's thinking, I'm not going to come out of this. Meaning, I'm going to shut down my business. Can I just use it to pay off all my past debts and go away?
Okay.
And the answer is no, you can't, because then you'll be personally liable because you used it for a non-allowed use. Now, again, you could say, well, look, I don't rent from February to June. I personally guaranteed that lease. Let me go to the landlord and say, I can either pay all this money, rehire all my employees, pay all my employees, and then close down because I know I can't come back out of the business, or I can pay you rent from February through June. Will you give me a release of the lease? Then I'm good on that.
Gotcha. Okay. Boy, there's a lot of questions. So, I guess, are you able to go until 4 and we'll just burn through these as fast as we can?
I'll do as you want you to do. I just don't want to waste too much time for people, but go ahead.
Oh, believe me, you are not wasting our time. So this is really, really beneficial. I appreciate it. Not many people have the, a lot of people can't really answer these questions with any authority. And so in your role, I believe we can trust you a little more than just someone that speculates. So thank you for taking the time with us. Okay, PPP loan funding was based on annual PR divided by 12 times 2.5. Okay, that was just a comment. While expenses are only based on 8 weeks, the 8 weeks will be less than the loan given. That's a statement. The 8 weeks, okay. I think that's just a statement. Okay, let's move on.
I saw a pop-up they wanted to redo that formula again. Kelly, could you go to the slide with the formula?
Okay, we talked about EIDL with the PPP, so I think we covered that. So
that, go back one more time. So that's the formula again. During the 8 weeks, payroll, rent, mortgage, interest, and utilities. And again, the limit is the rent, mortgage, and utilities can't exceed 25% of the total. Then there's going to be a reduction if I lost any employees. Then there's going to be a reduction if I lost pay, and that's going to be the forgiveness. And then could you go to the next slide? Sorry, the spreadsheet slide. That was the one before that. And this is where I kind of worked it out for you. Remember, that was your payroll. The next column was your rent. And then I had, here's your gross forgiveness amount, because remember, that's the first thing you got to start with. What's my gross forgiveness amount? And then here I looked at, my rent was 11,000. I'm looking at the line that says option 1. Well, 25% of the total would be only 10,400. So I'm only going to get the 10,400. So my maximum forgiveness now is 41,000. I had 5 employees instead of 10, so that gets reduced to half. If I paid them less money, there'd be another reduction, and that shows me that's what I would get.
very good. Okay, let's move on. Okay, regarding allowable use slide, item A6, if my total payroll is 200,000 per pay period and 40,000 of that is for the portion of salaries over 100,000, are you saying that I can't take all 200K out of my PPP account? I should only transfer over the 160K.
Correct.
Yep, I think we clarified that earlier. That is correct. Okay, good. Forgiveness is not taxable. Are the expenses paid with forgiven loans deductible?
So that's a great question. I assume they are. The forgiveness is definitely not taxable, but you made the payment. So I would say, yeah, it is. Right. But I don't know that. That's really a CPA question.
Maybe a CPA question. Okay.
Great question.
Yeah, it is. Yeah, I didn't even think about that.
Think about that.
If you closed the store and laid off all the employees, can you rehire some of it and start using PPP? Like there was a lapse in payroll for 3 weeks. Is that okay?
Oh, that's perfectly fine. And that's what they're encouraging you to do, because as we know, we're not going to get the funding. You know, the restaurants around here all closed, what, 3 weeks ago, 4 weeks ago? So they're getting the money now. So to the extent they're going to reopen, they'll have laid off the people in the interim. And again, the 8 weeks that they're looking at your maximum forgiveness is from when you get the money back. And that's when they assume that's when you're going to start rehiring people.
Right. So someone's asking if the slide deck's going to be shared. I don't know if we have the capability to do that, but I am recording this, and we're going to probably have it on the EO Southeastern Virginia Facebook page. I don't believe I have a way to email things to attendees.
So what you could do is just, again, and Kelly, could you do the last slide again? If you do, if you send an email to Kelly Warren, she's my assistant running the program, the brains of the operation, and just put PPP forgiveness presentation, and she'll just email it to you.
Awesome. Okay, so just based off the calculations for the FTEs, calculation had 4 employees back in 2019. In January 2020, I have 7 up until last week. Do I have to bring back to 4 or to the full 7?
So can you go back to the?
Okay. So I think this comes down because your slide had the thing about the.
There you go, right here. This is the slide.
Yep. Which my experience was slightly different than this. In my PPP application, they wanted to see from January 1, 2019 to December 31, 19, and they also wanted the pay period for February 15th.
Right. So we talked about remote, and there were 3 different definitions. The same thing's true here. So your application was based on one formula. The allowable is based on a different formula. The forgiveness is a totally different formula. So yeah, so let's do your application. They looked at if you remember, the act said the year prior to the origination, the guidance said the prior calendar year. None of them have anything to do with forgiveness or the allowable use. So here's how this works, and I'm sorry if I went through it too quick the first time. For non-seasonal, and again, we have no guidance on what that means, it's your choice to pick whichever one of these formulas works better for you, and you want to pick the formula in which the denominator, the one at the bottom, the denominator is lower. So in other words, the average number of FTEs February 15th through June 30th, if that's lower than the average number of FTEs through January 1 through February, you want to use that. So in that example, the way I heard it, he had 4 people last year and he had 7 people this year. 4 is the answer. If he has 4 over 4 is 100%, he's good to go.
Okay, this is an interesting one actually. It took me a second to unpack it, but is it okay to bump up pay levels to increase the legal usage of the PPP? So
let's go to the forgiveness.
I'm assuming maybe this is a situation the person doesn't have a lot of rent and utilities, and so they want to maximize.
So keep going. The A, B, C, D is going to be in place. Hold on a second. So B, C, and actually I saw this one coming. I didn't hear the question, but I saw it coming. B, C, and D, that's covered rent, mortgage, and utilities, must be an obligation in force prior to February 15th, 2020. So I read that one of two ways. Either that means, well, I could hire somebody new, they weren't there prior to February, and that's what they mean, or I could give a raise to somebody's there. And so the way I read the statute, yes, you could give somebody a raise. The same as you could hire more people that you didn't have before.
But the raises wouldn't offset a reduction in FTEs.
No, correct. The raises, again, you're starting with maximum forgiveness, then I'm going to do a percentage of headcount, then I'm going to do a reduction in pay for the people I hired back.
Gotcha. Okay, if the total loan proceeds exceed your 8 weeks expenses, which they should, because the loan proceeds were based on average monthly payroll times 2.5 plus rent, health insurance, utility, et cetera, 8 weeks of expenses should be significantly less than what one was approved for.
No. It should have been. It should not have been that way. Go ahead, because 2.5 times the average month, it should have come back to, that's 8 weeks. 2.5. The math worked out that way.
Okay.
Go ahead.
So they were thinking there would be some funds remaining, and what happens to those funds?
So again, as long as you spend on allowable use, you can pay it back over the 2 years. And we didn't go into this, by the way. If any amount that's forgiven, as I understand it, the interest that accrued is forgiven as well. But the stuff that isn't unforgiven, you could stretch out over the 2 years, right?
Yeah. So okay. So that basically whatever's left after the forgiveness occurs,
right?
It converts to a loan, and those we still have to spend that loan on these allowable expenses.
Correct.
Is that, yeah. Okay. Okay, good. I own a school. Each year I have fewer teachers in June than I do in February. It would not make sense for me to hire the full number back when I don't have work for them. Do you think that there will be a provision in the normal cycle of number of employees, of business employees? It's a complicated one.
Yeah, no, I understand the question, and the answer is I don't know. I mean, there's going to be a lot of industries that fit within one category or other where their headcount varied. And the statute gave you two choices, and I think that's all you're going to get is those two choices. Except if you're seasonal, in which case they say they're not even going to give you two choices, they're going to give you the one.
Gotcha. So this one is a statement, but I think we should turn it into a question. Is legal the same thing as forgivable?
No, absolutely not.
Right.
So allowable is what I've been using versus forgivable. So an allowable use, it's a much longer period and includes other things. Forgiveness is a smaller set of things, a smaller time frame, and has these other conditions on it.
Good. That's a good question.
Let's go back to allowable for again, Cal. One back. There, that's it. So allowable, interestingly enough, doesn't have that 25% cap. So if I want to use it all on rent, I could use it all on rent. That's allowable.
And to me, it sounds like there's also something that even if I use the PPP money for things like payroll and all of that, I still might not have it all forgiven because of the FTE count, et cetera.
Right.
But I'm not going to get in trouble for using money on that. But if I took the PPP money, regardless of the forgiveness, and used it for something that's not allowable, that's where you would run into a legal problem. Right?
Well, you could run it. I could run, if I used it for something not allowable, I could go to jail. In other words, if I went and bought a boat, and believe me, I'm sure there's going to be doing that type of auditing.
Right.
You know, I closed up my business and I just used it and bought a boat for my girlfriend. That's going to be a problem.
Got it. So the forgiveness part and the legality part need to be thought of two different things.
Yeah. So to me, again, it's a brownie and ice cream on top of the brownie. Do I get the ice cream? I might. I'm definitely getting the brownie as long as I stay for the allowable use.
And there's a poison pill in the second brownie, and they say don't eat the second brownie.
Don't eat the second brownie.
So, okay, we got a ton of questions. The chat room's full. My Q&A thing is full. We're probably going to run out of time, but we're going to do the best we can and make this recording available. Of course, reach out to Barry and Kelly directly if there's a question that is burning a hole in your pocket. Okay, can you increase salary and wages in the 8 weeks to match the prior quarter? Would that work, or is that gaming the system?
I think that would work. I don't know that you have to, though, because remember, there's that cure period that says if by June 30th, you've cured the reduction, and we're still waiting to see what the guidance says, but I think that that's going to work itself out. In other words, in the 8 weeks, you'll have paid 8 weeks, but as long as you don't let them go, you'll pay them week 9, week 10, week 11, week 12. By then, for sure, you'll have paid them more than 25% less than the prior quarter.
Whew, the next one's a really big one. I might come back to that just because it's so big.
Okay.
Can I use the 10K EIDL for the first part of a qualified expense and use the PPP for an additional qualified expense in the same category but not overlapping?
That I don't know. That's a great question. I just don't know.
But earlier you said don't use the EIDL loan for any of the allowable expenses for PPP.
No, I said you can't use them for the same purpose, right? Okay. And then the EIDL has two components. It has a $10,000 advance, and then it has a loan component. What I said was the $10,000 advance is going to be deducted from your PPP. I also said you can't use any of the SBA emergency disaster loan for the same purpose as the PPP. We still have not seen guidance to say, what does that mean? Does that mean the same payroll? Does that mean the same payroll for the same period? Right. My guess would be the same payroll for the same period is disallowed. I don't know whether it means you're not allowed to use payroll at all.
Gotcha. The loan forgiveness period is 8 weeks after receipt. However, there's still a 2-week period that is not covered to get to June 30th. So an employer has to cover those 2 weeks of pay after the forgiveness period to get the headcount date of June 30th. Is that correct?
No. Again, very confusing. And they're right. For them, it's 2 weeks. For other people, it may be 3 weeks. For other people, it'll be 0 weeks, depending on what you get the money. The headcount is only during the 8 weeks.
Okay.
Except that they'll let me cure if I bring them back by June 30.
Cool. VEC question. Okay, so first quarter VEC state unemployment insurance payments are due April 30th. Could PPP funds be used to pay that payment for first quarter 2020?
So to me, if it's for a time frame prior to the loan, it's not going to count towards forgiveness.
Gotcha. That makes sense. Oh, can the spreadsheet be emailed out? I guess somebody wants to tinker with the spreadsheet.
Just go ahead and send it to my secretary. And again, it's for purpose of illustration only, but it's just to give you the idea of here's how the things would interact. For you, it's going to be totally different because you have to figure out what your employees are, what your rent is, what your other expenses are. And again, I also use some, let's go look at the spreadsheet for a minute. I use some very simplistic analysis. One back is I assumed everybody got paid the same amount, which of course is not a fair analysis. I ignored FICA. I ignored some other things. I just took a rent number at random. So all those numbers for you would be changed. I was just saying, if I were you, that's something I would at least look at. You know, how do you, and Chip, how many different paid programs do you have among your staff?
I don't really have a lot of different ones. I don't play a lot of games.
But I'm saying there's still different rates. Somebody's making $8 an hour, somebody's making $8.50, somebody's making $9, somebody's making $10.
Oh yeah.
So this analysis you really couldn't do this way because I've assumed that every single person from top to bottom makes the same amount, which is not accurate.
Right.
And then I haven't even considered the reduction in salary. So the main reason I wanted to do this was not for anybody to use, but to really illustrate that this thought that, well, I could rehire everybody in the end and I would be fine. The answer is, well, no, because I would have had less payroll expense that would have been recaptured. And that's why I showed option 3, you actually come out further ahead because you paid these people during that 8 weeks. That's increased your maximum loan forgiveness. Go ahead. Go back to the allowable use, please. Thanks.
Okay. In lieu of giving employees a raise, which would be continued for future periods? Could you give them a bonus?
As far as I know, yes. It's the pay during the 8 weeks.
Yep. FICA, employer or employee, is not allowable expense. Is that correct?
So FICA, for forgivable, FICA is not a forgivable expense employer. Any deduction from employee, as I understand it, is forgivable.
Gotcha. Okay, I'm gonna switch because a couple of those are kind of complicated. I'm trying to go fast just in case we run out of time. Whew. Okay, we talked about that. Those came in before the presentations. I think that we answered those. Or does it look at? We talked about that. Okay. What if there is no business, no customers coming? How do they expect us to hire all the employees back? So I guess this comes down to, do we just pay them to sit at home and wait for, let's say, the nightclub or the concert venue to open back up?
So this is 2 points. One, and this is, I think I tried to start, figure out what's best for your business and what your business is. Try not to adapt or focus your entire business on this. If you say, look, I am a business and I know I'm not going to reopen until October, is messing around with this make a lot of sense to you? Maybe it doesn't. So yeah, what do they expect you to do? They're just trying to help. For some employers, this will be a great benefit because they weren't going to let their people go anyway. For other employers, they're, and I feel so bad for, if you're a restaurant at the oceanfront, I mean, seriously, do you think you're gonna have business before March? I don't know. Because even if they lift all the restrictions, are the people in New York and New Jersey and Pennsylvania going to come here on vacation? A, do they even have vacation? B, if they had vacation, do they come to your restaurant? And C, if they did, are they going to make you have them seat so 6 feet apart from each person and so and all this other stuff? So I think you got to make a decision. What am I going to do about my business? Do I think I can make it survive? If so, how am I going to maximize my benefit to make my business continue?
Yep. Okay, it looked like somebody wanted that loan forgiveness equation, but I think we brought that back up. And send, if you want the slide deck so you can see the equation, send the email to Kelly. We talked about that. Okay, we just got the spreadsheet. Please mention email address. Okay. Okay, I'm just going to read it the way it is. Okay, also to handle the delta between unemployment insurance versus their normal pay. Also to handle basically the difference between unemployment insurance versus their normal pay. Not sure if that's a question. As opposed to a pay increase, could you bonus employees to bump up payroll? We said yes on that. I understand that the intent of the PPP was to employ people even if they stayed home and did nothing. Is that true? You just answered that.
So I would say yes, but I would say this, and again, on my analysis, my little spreadsheet, my thought for you would be to say, I'm going to bring these people back if I have something I can let them do. Let's go back to that restaurant example. If you're a restaurant and you're bringing these people back, why don't you say, hey, once this reopens, we're going to have to comply with CDC concerns. How are we going to refit our organization? How are we going to restructure what we do? How are we going to move the tables around? And I would be using those people for that. Obviously, they can't serve customers because you don't have customers, but hopefully they'll do something to make your business more profitable as you come out.
Yeah, you could catch up on training, right?
Training, whatever.
You could redo a menu. You could try some new recipes. Basically, you can't bring in the general public, but you can still do productive work so that you're ready, right? Let's see. Okay, this is a good one. Do life insurance and long-term disability count as healthcare benefits?
I would say life insurance does not count, and long-term disability, yeah, I don't see that either. It'd be a good thing to try, but I don't see it happening.
Right. Okay, there's an FYI there. Okay, so let's go to the big complicated one, and we're gonna have to. I'm gonna do this. Okay, on the forgiveness, is it what you spend out of what you got in the first 8 weeks is forgiven? So as long as 75% of that spending was on payroll, or is it that you have to use 75% of the total loan amount given on payroll within those 8 weeks in order to receive any forgiveness?
Okay, so the first part's correct. So ignore the loan amount. We just don't care about that. Forgiveness is going to be based on what you spend in that 8 weeks. And of what you spend in that 8 weeks, you can't spend more than 25% on rent, utilities, mortgage, etc.
Okay, so let's, so I think we answered it. So you gave a hypothetical, but I think you answered that question. Okay. So this one has come up on other webinars, and I don't think you touched on it. So any update on 1099 independent contractor as to what is allowed?
Meaning on what they can get?
Yeah.
I haven't seen anything further on the independent contractor side.
And I guess there's two ways to look at that. If I, as an employer, also have 1099, they're not included in this PPP thing. They got to go get it themselves and as an independent, right?
Correct. Yep.
Got it. And then there was a follow-up question on the intern, and this is, I was trying to understand it, but I let the intern go on March 19th. He was not included in the FTE count on the PPP application, but his payroll was included. Oops. What should I do?
Okay, so again, and I got to stress this, ignore the application process. Just completely ignore that from your mind. Could you go to this slide with the two fractions? In terms of forgiveness, they're just going to look at two fractions. It's either the fraction A or the fraction B. We don't care what somebody got paid last year, how many people you had last year. It's this fraction. FTE during the 8 weeks divided by FTE during this period versus that period. So if the intern was in one of those periods and you're using that fraction, that's going to come out to haunt you. If they weren't in one of those, you're going to pick that one. Unless you're deemed to be seasonal, in which case you have to use the option that they say.
Yep. Okay, this one hadn't come up yet. Interest expense. So would the interest portion of a note payable, for example, equipment financed, be allowable?
So that is definitely allowable expense. Could you go back to allowable? And that's the biggest difference between allowable and forgiveness. Is allowable is any payment on a debt obligation incurred in its E prior to February 15th, 2020. That does not appear on forgiveness. No matter what happens, none of that will be forgiven.
So, but it's legal to use it for that. You're going to pay that back as a loan.
Yep.
Right.
Not counted in forgiveness.
Got it. I own a construction company. In addition to our employees, we also hire sub-labor. Is this labor an allowable expense? I guess this is, can I use the PPP loan to pay my contracted labor?
And the answer is no. No, it's payroll.
Got it. Very good questions. Wow.
That's a great question.
Okay. A couple other. Is the 100K limit just compensation, or is it compensation and benefits? It's a good question. Still there? Oh, Barry froze up. Are you still there?
I'm still here.
Okay. For whatever reason, it froze up.
Okay.
Did you get that question?
No, it's the 100K.
Is the 100K limit just compensation, or is it compensation and benefits?
I would say just compensation. Now, if there's the benefit shouldn't, I'm looking at them right now. I guess the only thing I would have a question in my mind is the retirement benefit, because the healthcare benefit's not going to vary based on wages. I might have to look at retirement benefit if that was based on some percentage and it went over. That might be an issue. So I'd say retirement benefits probably would be excluded to the extent they are based on wages. You wouldn't calculate on the wages in excess of 100,000.
So things like bonuses and things like that would be included in that, but the health care, for example, that doesn't make somebody go over 100.
Yeah.
Okay. Yep. Okay. If you paid your health and dental for April and May prior to receiving your SBA loan, can you still count the payments to providers, also the rent payment?
So that's a really great question, and we don't know. We're just waiting for the guidance on what they mean by paid and incurred. Technically, I would say it's probably not going to be covered, but you should be able to pick it up at the end because you're going to pay going back, right?
Right.
During the 8 weeks, you're going to make an equivalent payment, hopefully for that same amount of stuff.
We still have questions rolling in. Tell me now, do we need a hard stop, or can we?
Yeah, let's make it a hard stop before 15. I want to belabor this.
15. So we're going to do this fast then.
Okay.
Okay. This is a clarifying one. Just to clarify, the loan is to be spent on allowable expenses from 2/15 to 6/30, but the forgiveness is based on the spending in the 8 weeks. So 75% of the spending in the 8 weeks needs to be on payroll. Do I have that correct?
Yep.
Yep. Is officer compensation increases allowable?
As far as I know, any salary is going to be covered as long as it doesn't exceed 100,000 prorated.
Right. Payroll companies report for PPP calculation purpose used employer medical contribution as part of income calculation. And that might be some misspellings. Payroll companies reports for PPP calculation.
So I think he's saying on his application. And again, we just ignore everything you learn about the application, everything you do about the application, just ignore it. Has nothing to do with anything now.
Okay. Awesome. I think we have completely gone through all the comments. I think it's good to stop now. Can you put the last slide up there with the contact information? Let's leave it there. And then the other thing I'm going to do in the chat room, I'm going to also put, let me see, let me go over to the chat box. I'm going to put your, both your name, your email, your phone number, as well as the Entrepreneurs Organization website. So if anybody on the call is an entrepreneur and wants to get some of the supports or some of the peer mentoring from either EO or the EO Accelerator program, please copy paste that over to your browser and check us out on the website. Barry, this has been amazing. I appreciate you helping us out navigating this. You are definitely the most, you are the authority on this. And I think everybody on the call really, really appreciates your time.
Hey, Chip, I have a great deal of respect for what you've done with your company and what you've done with EO, and I thank you for giving me this opportunity.
Awesome. Have a great day. Thank you.
Thanks.